The way that we interpret the data that we've just received is all part of the overall trend of the empowerment of retail investors. So I think that's kind of the headline here that we're seeing. There's a continuation of that trend. The retail investors are more and more keen to become self-directed. Only 15% are keen to work with a human financial advisor. And we estimate that over the next 20 years, as part of this massive trend of wealth transfer, something like £5.5 trillion just in the UK will be transferred from one generation to the next, is going to completely disrupt the entire wealth management market. And as you say, I think the key question will be, how will they engage with this next generation of clients who are used to more automation, technology, more modern services?
And yet, the beauty of those aforementioned beleaguered asset managers I just put down upon is the fact that I will get a return on my money, by and large. It may not be quite as much as I want, but I will get a return on my money. But I'm worried if I do it myself, I won't get a return of that money. And herein lies the concern, is actually that retail investors, with all due respect to the best of the bunch out there, the vast majority haven't got a clue what they're doing.
Well, I think there's a couple of things to point out there. First of all, the overall narrative around retail investors not having a clue what they're doing, I think, is very much driven by a tiny fraction of the overall retail investor population. So I presume the meme stock craze is one of the phenomena that you're referring to. Only 15% of the respondents of the survey participated in the meme stock frenzy. And so we need to be careful that we don't generalize the overall retail population.
Hang on. No, I'll just follow up here. AI stocks, 33% think they're overhyped, yeah?
Yes.
That means 67, my maths is pretty good today, yeah. 67% think they're not overhyped. So they're happy to buy a stock, albeit a fantastic piece of technology that has amazing chip technology which is going to power AI. They're happy to buy it at 25 times sales. And you're telling me that the majority of those investors know what they're doing, investment-wise?
So the 33% think it's overhyped. That doesn't necessarily mean that the rest think it isn't overhyped. Some might not have a view, as according to the survey. But it's a relevant point. I think the key point that we interpret the data is that they are long-term investors, unlike professional investors who need to report on a quarterly or annual basis. And so they are in a position where they have less constraints and can take a more long-term view and ultimately can have these conviction plays.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.